The Hedgeless Horseman here. It's January the 19th, 2023. Uh, Volatile market day. It's just, yeah, I mean, apparently gold and silver are ripping right now. I think a bunch of metals are up. I am pretty sure I looked at silver a few hours ago and I think it was actually down 1.4% or whatever. It's like, just goes to show, I mean, my opinion, uh, looking at the silver price or guessing where that or gold price or whatever, looking where that might go tomorrow or today or next week. I mean, if you are one of those uh, emotional short-term trades, as soon as silver's down, you're gonna read, oh, silver's gonna go down to this level, sell everything. Because as soon as something is down, it's like what you read and what people talk about is obviously the downside target, not how much you're gonna make. Let's say if it all of a sudden does like this and turn up. No, I mean this was people probably quite bearish here, and then it goes up. It might as well go down tomorrow. I have absolutely no idea, but this is, in my opinion, just a show for short-term speculators. That's what I don't care about at all. It's like there's so many juniors right now that's like should, especially the higher quality ones, could easily go up 100%, and nobody could say, "Hey, that's really expensive." No, and that's without help of the metals. So if you have something that is both cheap and a good management team with good prospects, good targets, I mean, time is your friend. The whole point of value investing is basically you buy something and someday the market will be a bit wiser. You don't know when that is. It's just that it's gonna happen, and uh, someday in the future you're gonna get your reward for spotting the opportunity or understanding that, hey, this company is way too cheap. And obviously, if it's a great management team, let's say, and there's a lot of growth creation left to be made, probable growth, that means that not only is just waiting for something to go from cheap to expensive the only way to be a value investor, really. You get paid to wait because the value is gonna go up on average, and time is the only way you capture the inherent alpha of a superior management team. Meaning that if you give them 3 years, they'll have created more value on average than if you give them one day. So you expect to value to be higher the longer you give them, and therefore you expect to be up the longer you give a story time, a management team time. So it's like, yeah, buying something cheap with a good management team with serious growth potential. All you can do is buy cheap and wait. Says nothing about, okay, this is cheap only if silver is up today or whatever. No, absolutely missing the point. Um, yeah, I mean, look at these swings. It's like, what am I supposed to do with this? What am I supposed to do with this? Imagine how catastrophic it would be to be a short-term trader if you're looking at the, let's say, silver price. These are not small swings. These are like 4.69%, 6% down, and this is just. I mean, it's basically gone nowhere since for over a month. Basically not gone anywhere. But every day, depending if we're here or here, you'll see people give, if it's up here, price target will be here, meaning, okay, buy people. If it's down here, it's obviously going to go way lower than that, so that's why people sell here, and that's okay. Now it's going up. Then I better buy because now the price target is apparently up here according to Twitter or forums or whatever. And it's like you're just gonna buzzsaw yourself. Meanwhile, if you own the cheap silver junior, they probably at least have created value over this period of time. Okay, it's just a month, but anyway. So if the, let's say, silver is at the same price, your shares are at the same price, at least you expect there to be 1 month worth of value creation, or at least 1 month closer to, let's say, drill season or whatever. So it's basically going up in value simply because either they've created value or the time value, the value of time itself. Anyway, let's look at some news releases. Nevada King significantly adds to its strategic mineral claims holdings along the prolific Bell Mountain trend, Nevada. I am not sure I can see which claims are the new ones. Okay, newly staked not yet disclosed claims. 12. Can we find 12 here? Okay, so it seems that they are not mapped yet. Anyway, you can read the news release and you can read what Colin says. Nevada King was formed in 2016 with an aim to assemble a formative land package along the most prolific gold trend in the world's premier mining jurisdiction. Today we rank behind just 2 mining juggernauts, Kinross and Nevada Gold Mines, in load claim tenure. No other junior company ranks in the top 7 list of claim holders. And you can read here also. Nevada King's unfolding discovery at Atlanta Gold Mine provides a compelling reasons for investors to consider Nevada King. Our strategic land package provides another. I mean, makes total sense. This is how I see it as well. The Nevada landscape has gone from near dormancy when the company started in 2016 to again becoming a preferred destination for gold-focused mineral investment. I mean, we see a bunch of headlines from some countries that aren't too favorable, so it makes sense you flee home to Nevada, which is, I think it's the first or second ranked jurisdiction in the world, according to Fraser's mining survey. This is best reflecting the fact that following a decade that began in 2011, starting in 2020, several major mid-tier mining companies have entered or re-entered the state, spending billions cumulatively making acquisitions, forming joint ventures, optioning pros. Not only are there more companies coming to Nevada, they are also spending more. It is in this landscape against the backdrop of rising gold prices that the Nevada King portfolio was built for. I've written about Nevada King before. I think it's as a HODL candidate, it's just gotten better. This is in all HODL portfolios, simply because basically what is stated. And I think Atlanta Gold Mine itself is likely. I think there's a pretty good chance that Atlanta Gold Mine itself is a company maker, meaning that at the end of the day, it's going to be worth at least a few multiples of the current market cap. In that case, you get all the 11 other claim packages for free. And again, gold is rare. Prime prospective ground in a prime jurisdiction, that is the rarest thing in the world, because land is not something you can discover more of, obviously. So it's actually even rarer than, again, gold, etc., because there's obviously a lot of gold left to find somewhere and at some price, but there's no more land being created. We have discovered all land. So it's the epitome of, it's the, let's say, most finite resource there is. Land, actual land. So I mean, in a full-blown mining bull, you can just imagine how many projects could be joint ventured, or what they could be sold for, or maybe they make a discovery or two, etc., etc. So this is really one of those. I like to think of this as I think one should look at oneself as an asset hoarder, and that our portfolios are basically a conglomerate of companies, meaning that you're treat it as your own Berkshire Hathaway of the mining industry. Obviously, you would want long runway for growth, preferably margin of safety. If you were the actual, pretend you're the actual 100% owner of Nevada King, you would own something that's probably going to be at least 1 to 2 million ounces of pretty high grade near surface oxide gold at Atlanta Gold Mine, and you have all of this to work with, which could last for who knows, decades, years at least, and obviously has some value. So I really like that. It's basically prepped for the bull, and it's getting even more prepared. They're locking up as much as they can because one day everything here is probably going to be very hot and expensive. Also, FireFox Gold test new drill orientation, hits more high grade, including 13 grams per ton over 15.5 meters at Mustajärvi project, Finland. So obviously really good intercepts. That's way over 100 gram meters. And those would be 21, 22, 23. This was the best hole. And including 3 meters, high grade. Yeah, I guess one could say it's a bit smeared, but I don't think it's. If you take these out, I still think. This is everything. It would still be high grade, I'm pretty sure. So I don't see a problem there at all. Really good results. 7.2 meters at 16, obviously very shallow. You could imagine doing an open pit on, I don't know what the true width is, but I don't know, at least 10 meters at 13 to 16 gram per ton gold. You don't need a lot of that to make a lot of money. 1.7 meters at 31, and this 23 1 meters. Every single hole basically hit high grade gold too. I guess depends on what one classifies as bonanza. One can say high grade to bonanza gold. Obviously these are quite closely drilled. This I think is 23. That's still against at least 1 meter of 26. So it's not a huge step out, etc. I find it interesting with the difference in drill orientation as well. But you can see here in the inserted image here, this is where they're drilling. This is where they drilled mostly before. So they have pretty much, I don't know if they've hit high grade here, but this is, how long might this be? I'm guessing this is 1.5 kilometers or something. So there's evidence they have hit high grade gold over a strike of up over 1 kilometer. So there's obviously potential for some size here. And who knows where the actual let's say pockets of really good mineralization is. We know there's something here. We don't know, it might be that it's actually running like this, and this drill orientation is hitting the veins in a better way, because obviously if the veins go something like this, then you can just clip them, let's say, and you actually perhaps miss much of it. And I would encourage you to watch the YouTube video up today from Focus Communications, interview with Patrick Highsmith. He goes, I was watching that, I had to pause for this to get some more insights, and I hope Quinton might talk about it on tomorrow. But encouraging, obviously, 17 million market cap Canadian. It's everything is cheap. Almost everything is cheap in this sector. And the thing is, with FireFox, you also get a very large land package. I don't know if they have the land package here. No. Okay. But it's not just Mustajärvi. So this is a legit target, a legit high-grade gold target, obviously. You don't see assays like this every day from any junior, not even the higher quality ones. So this is getting more and more interesting. Obviously, you want to see a project get better and better, not worse and worse. And again, you also have kind of like the Nevada King situation. You almost have a land bank because they have such a big claim block among Orion and Rupert, and Agnico Eagle is nearby. Kinross is in the area. B2 Gold is in the area. So very good vote of confidence, or thumbs up from larger mining companies. They're saying, hey, we want to be here. We like the geology. We like the jurisdiction, etc. Where FireFox will be in a year or two from now, I have no idea. If they build on this and it actually becomes a high-grade gold mine or a high-grade gold deposit at 1, 2, 3 million ounces, obviously that's probably going to be worth a few $100 million, I would guess. So chance of that is low according to the market because that's not priced in, but hence that is the risk reward. If they absolutely find nothing more really, or these were just one-offs all along here, and there's no size to this, you're not going to make money from Mustajärvi at least. But if this does indeed continue to grow and they hit more, then one would expect a rising value for years to come, and with that a rising share price. So again, we don't know. It's just that this is getting better and better, it seems. So that's good. That's what you want to see. Newfound Gold discovers multiple new gold zones extending 1.5 kilometers south of Keats, increases Appleton Fault Zone high-grade gold corridor to over 4 kilometers in strike. Quite a few. Keats Main South. What's this new one called? From the south end of Keats Main Zone to the north zone. Okay, what is it actually called south of Keats? Keats Main South. This might be Keats Main South. So 2.45 meters of 25 grams, 14 bulk high grade, including a higher grade. So maybe this is quite a bit lower if you take these out. Still high grade hits, and here's a very high grade hit, 2.20 meters of 72 grams. And 1 meter at 60. That's 2.5. Yeah, maybe it equals out to that. I don't know. Okay. Now this. This is actually a different vein. So they hit 2.45 meters of 25 grams, and lower in the hole they hit something else, which graded 72 grams per ton over 2.2 meters. And here's another hole which hit high grade as well, and in two different spots. Say more high grade. I mean, decent widths, high grade, including narrow, even higher grade. And here we also have a bonanza, 2 meters, 79 grams per ton. And this is also nice. I mean, there's obviously a bunch of drill holes. 51 diamond drill holes. So it's you get a sense yes, there's a lot of misses in these holes. That's because of the nuggety nature. That's yes, there's gold, and 5 meters away there's less gold, or the gold is gone, or whatever. That's why you pretty much, I mean, they have, I think, around 14 drill rigs active. You can just imagine how slow the pace would be in terms of value creation if they had one rig and need to do these close space step out holes. I think they're obviously, if you want to get a major discovery delineated anytime soon, you'd need a lot of drill rigs, because this is not a disseminated system where you can drill 10 holes and you can infer there's probably 3 million ounces here or whatever. It's like Snowline. But it's okay, what is the main takeaway? The main takeaway, I would say, is they're finding new stuff. They're finding new. I hope they have a map. Okay, there's no map that I can see. I was like, yeah, extending 1.5 kilometers south of Kitts. I mean, there's obviously gold everywhere. It's like, we don't know if Newfound Gold is going to get acquired or not, but they are for sure showing potential suitors that, hey, whatever you're buying us for, you know you're going to, or whatever you think we have right now, you pretty much know that there's much more gold to find. And that's obviously what companies, larger companies want to feel like. Okay, we might pay a premium to the current price, but the market is so short-sighted it doesn't care typically about, too much else other than what it can see. But so in that case, like the larger company can feel like, well, we believe there's, let's say a chance for a few million ounces more of high grade gold. So yeah, we're happy to pay, I don't know, 40% premium today to the current price because we think we're still buying it cheap based on the long term potential. So I really like this way. I mean, they're kind of swinging for the fences at the same time as they're outlining what they've already found. I think that is a testament to, Colin and the guys, that they have a pretty good idea how you go about value creation strategically. Like again, Nevada Kings, like it's set up for a bull market. It's not that they're gonna find themselves in a bull market and then like, oh, we didn't prepare for this at all. No, I think that's like, as an investor, this is probably what you would want to see, that they don't just, play totally safe and just go for near resource stuff, but are stepping out, hiking up the blue sky potential. So now they're up to over 4 kilometers in strike length, which is obviously quite a distance, especially if you don't need much of this very high grade gold stuff to, have a, let's say, considerable resource, at least considerable value per ounce. So you don't need too many ounces. Snowline Gold intersects 189.2 meters or 1.2 grams per ton gold near surface in 170 meter step out and commences metallurgical testing in its Valley Discovery Rogue Project Yukon. Okay, metallurgical testing. Why? I mean, that's good. You don't typically see juniors starting to do metallurgical testing after, like, I don't know how many holes they have out now, 20 maybe. But then you can kind of immediately get a sense, because if the metallurgy is good as, let's say, on par with Fort Knox or the Victoria's Eagle deposit, all of a sudden you know that's like, hey, this could work with quite low grades. And if the grades are, 1.2 grams per ton, for example, the operating costs are probably very low, and the operating margins could be very high, meaning the value per every ounce in that deposit goes up if the metallurgical results are favorable. They also have a very fat intercept in hole 27, 481.5 meters at 0.69 grams per ton. That includes 250 meters of a 1 grammer and 51 meters of almost 2 grams per ton. Yeah, I mean, for a Tintina Gold, Tintina type gold deposit, Fort Knox style, these are very good grades. And I haven't done, the calculations, let's say, but I think okay, 26. I mean, these are very robust. So now at least you have, like, I don't know, 500 meters. What's that? Yeah, 500 meters, and it's, we have no idea how long it goes that way. We don't know where it gets cut off here. We don't know where it gets cut off at depth. So yeah, I mean, we see some pressure in the share price right now. One thing I would say with Snowline is, like, the negative from the latest drill news releases is that blue sky has gone down as we know it. We know that this entire thing is not mineralized at, let's say, above 0.5 grams per ton because they hit like 0.17 and stuff like that. I don't know if, I mean, the Fort Knox mine has a cutoff grade of 0.1. So does that mean that 0.17 is actually, profitable? I have no idea. I mean, obviously depends on the gold price. But is that too much to get excited about? I don't know. But the question is like, if this is, let's say, probably at least gonna end up with 10 million ounces, let's say. That's obviously a very sturdy deposit at these grades, and if the metallurgy is good, excluding the, let's say, infrastructure costs, just in terms of economic value per ounce in an operating scenario, I would think that 10 million ounces with good metallurgy and grades, up to 1, 2 or more grams per ton, I would think that in an open pit scenario with margins of scale or economies of scale, I would think that could be extremely valuable. Question is, of course, how much or what are the economics if you factor in, putting in all the infrastructure that's needed. So that's a question. But then, of course, we're still, I think, waiting for the Gracie results. And we have more assays pending, first of all, from Snowline. So, I mean, this is, I guess, pending then. Hole 28. Yeah, assays pending here. I mean, I wouldn't expect too much from this. But this hole might run quite well. I mean, here you can see that's quite some visible gold stacking. I mean, the stars here appear to be much closer spaced than in this even. I don't know if that depends on drill orientation or whatever, but this probably be a pretty good hole. Hole 25, no significant. Okay, drilled outside. Where is hole 25? Where is hole 25? Okay, that's up here. Okay, that missed the intrusion. Still, we know there's gold all the way out here. So we don't know if it, again, trends down at depth or whatever. Anyway, so okay, how to look at Snowline. I think the market cap is around slightly above 300 million. Is that pricey for, let's say, a 10 million ounce 1 to 2 gram deposit with good metallurgy? No, I would think that, again, I don't know what the infrastructure would cost, but it's like, yeah, that's probably worth several billions of dollars. So it's like, is it expensive? No, I wouldn't think so. The thing also with Snowline is, of course, that they have one of the largest land packages of any junior. They have, I think they have at least 15 other intrusion-related gold targets. They have a discovery at Jupiter already. They have that big Ursa target, which is base metal stuff. Hopefully similar to what Fireweed Metals are drilling. So you get a lot more than, I mean, again, kind of like Nevada King. It's like, you own a lot of real estate if you're a shareholder of Snowline, because you get such an enormous, a large amount of projects. I mean, they have, that's pretty much a region scale junior explorer. So that's obviously very good. So it's like, imagine we go into a full-blown bull market and they at least have 10 million ounces here, let's say. And maybe they end up hitting it Gracie or drill up more Jupiter, etc. So when you combine everything that Snowline has, I certainly don't think it's a sell at this price. Now in the short term, I have no idea what the market's going to do. I mean, I expect some more good holes here from Valley. From Gracie, I don't expect any bullseyes this season, but I do think they'll have a better understanding where they might find a bullseye for next season. We know they hit visible gold there. So we know there's something lurking down there. And it's a huge trend. and maybe they'll drill Jupiter, etc., etc. So I think again you get a lot of bang for the buck. Snowline has a lot more stuff than just Valley, and if Valley probably becomes 10 million ounces, the question is, 300 million Canadian or whatever it is that a pretty good price for all of that? I think actually it is. And yes, we have no idea, first of all, people already talking about, permitting and yada. Yeah, true. I mean, it's Yukon and it's remote, you need infrastructure. But it's like, let's say things change. Time goes by. We don't even know. Let's cross that bridge when we get there. Let's put it like that. Is it a no-go? For sure, no. I mean, they've had local representatives there already. They have some agreements with the First Nations who are, I think, help them build, for example, their camp. So I think they have pretty good relations. We know that Scott, for example, he's a Yukon native. I think that goes a long way. So yeah, this is one of those plays where like possibly this could be they have basically the exploration potential of a major, and they might probably have at least 10 million ounces of what could be very economic gold. So if you're a land baron or like let's say an asset hoarder, you get a lot of assets in Snowline. So I like it from a hodl perspective. I have absolutely no idea where the share price is going to go in the short term, as neither does anyone else, but everybody acts on it. Then we have Eskay Mining out with a beefy news release. Eskay Mining confirms new precious metal rich VMS system at Scarlet Knob, Tarn Lake at similar stratigraphic position to the Eskay Creek deposit. So they have, there's you can read this at your own leisure. I can't read everything here. But you see stuff like, additional spot rock chip samples collected by Eskay's exploration team at Scarlet Knob and Tarn Lake in 2022, as well as recently identified legacy sample data confirms the presence of a robust AU and AG rich VMS mineralization along a northeast trending zone approximately 500 meters long. Gold grades of these other samples range from less than 0.1 gram per ton up to 56.7 gram per ton, and silver grades range from less than 1 gram per ton up to 142 grams per ton. And you can read more spot samples here, etc. Preliminary results from the first ever drill holes completed at Tarn Lake include 4.1 grams per ton AU and 98 grams per ton AG, 5.39 over 5.43 meters within 2.47 grams per ton AU and 72 grams per ton AG, 3.42 grams per ton AU, equivalent over 11.34 meters. So that is not 40 gram meters exact. What is that? Anyway. But it's not too far from it, which is, according to the Kennerland study, a very good sign. If you get it, especially if you get it in less than 4,000 meters, they're not far away from that. So there's obviously something going on here. It's like these are more than anomalous values. 5.39 over 5.53 meters. You could pretty much. Mines have that are in operation. And this would obviously be a bit more bulk, like 3.42 grams per ton over 11.34. That's kind of what the Skeena resource is. And you can read all the comments, etc. I'm waiting for the Decker to do another video, or Quinton to talk about it, because they are obviously, PhD levels geologists, and I am not. My takeaway is that, as always, like when they carpet bombed the TV Jeff trend, the hope was they were swinging for the fences. The hope was obviously that they would get, let's say, lucky and just hit in a lot of places, so you could almost already say that, hey, the TV Jeff trend is like, we know there's mineralization across 3 kilometers or whatever. That didn't happen. They hit some good. They hit some good holes, etc. But the problem with VMS systems is that, especially if you're kind of drilling blind, uh, you, I mean, they can be pretty small. It's like the Eskay Creek, original Eskay Creek deposit. I think it was, what was it, like 650 meters long or something, 20 to 40 meters thick, etc. And snaking and there's faulting, etc. That is not easy to hit. Obviously, and that's the reason why it took, what was it, like 109 or 140 holes before they actually made the discovery hole. And then they, stepped out from that. And a few years later, I mean, the shares of that company, I don't remember the name, shot up, thousands of percent, I would imagine. And that ended up being a multi-billion-dollar success. Again, from drilling 140 holes, somewhere around that, they hit it once. So they basically found the needle in the haystack, and then it became a multi-billion-dollar mine after that. So that's what we're kind of dealing with here. These zones or deposit can be very discrete, but you kind of only need to confirm it with, let's say, one hole. That's the whole reason why it's like, if you do early stage exploration, especially I guess for VMS deposits, and you drill quite a few holes, if you hit something decent in one or two, that could be a very big deal, just given the fact how hard it is to hit if you don't know where the ore body is. So even if there is one or more Eskay Creek type deposit, or at least Skeena type deposits like 3 grams per ton, you're not just gonna go out there and like boom, 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 you're gonna drill one up in one go. No, Skeena missing drill holes as well. And they recently found mineralization in that area, which was, I think, just like, what was it, like 40 or 80 meters away from previous drilling. Something like that. And obviously that deposit has seen a lot of drilling, not only from Skeena, but it has already been mined already, the original discovery. And then Skeena came along and has been drilling a lot, and still they're finding new stuff close to the, what they already know where there is mineralization. But they had no idea until they hit it. So it's easy to just look at this and like, oh, what a total bummer they didn't, have, I don't know, 30% of the holes weren't Eskay Creek type stuff. But that's, I mean, Eskay Creek took 140 holes to hit once, a discovery hole. And then after that it became a multi-billion-dollar success. So that's what they're doing here. And it's like, let's be frank here. I mean, this is the Eskay Creek deposit. I think now it's maybe up to 1 kilometer. So it's like, this stretch here, multi-billion. How many, just theoretically here, how many potential Eskay Creek deposits could you fit here? And it took 140 holes or whatever to find this one, even though they kind of had a sense of there's probably something here. I think, if I remember correctly, they just ended up like, yeah, we'll do a, Hail Mary, we'll drill a geophysical anomaly or whatever. It's like a Hail Mary. It's not like, yeah, this is obviously where one of the most valuable mines in the world are located. No, okay, we test it. And, for whatever reason, Mother Nature had put one of the richest deposits there. So if that took a while to hit, I mean, if you just throw, let's say a few or several drill holes at any, I mean, imagine how easy it is to miss, even if it's there. That's why obviously there's, in my opinion, immense potential in Eskay Mining's land position. Controls 85% of the trend or thereabouts of the Eskay Creek, prospective areas. And you have here you have Lower Hazelton, Upper Hazelton, etc. This is like 7 kilometers from Eskay Creek, and it's the same rock type. So it's basically the same age. So whatever formed these deposits probably at the same time formed Eskay Creek mine. So you know that same ingredients, let's say, are here. This area was probably active when this was active and formed the Eskay Creek mine. So we, I mean, look. Well, these are ship samples. I think this. Are these in a drill? Okay, 2022 drill color. So it's like 1-2 holes. I think that's it. Okay, yeah. Anyways, like you get the idea. It's like, good luck. I mean, if you write this off just because they drilled 2 holes, then you don't really understand exploration, especially VMS exploration. This is 500 meters. Just a bit higher than that, and you have original Eskay Creek. And it was like, what was it? Let's say 20 to 40 meters thick. I mean, you could put that almost anywhere here. So, yeah. So I mean, there's a bunch of stuff left to explore. We have no idea. Well, I shouldn't say we have no idea. I mean, that's what we're trying to find out, obviously, because something produced this gold and silver. 56.7 grams per ton AU. That is mineralization. And here you have 63. Well, that's AG. But it's like, yeah, 3 grams per ton, 9 grams per ton. It's like, that doesn't drop from the sky. We haven't hit that kind of mineralization yet. Is there a deposit somewhere around here? Yes, so again, something created this. Is it economic? We don't know. Is there, again, it could be anything from sub-economic because it's, let's say, too small, or there might be, I don't know, a couple Eskay Creeks in this picture. That's how early it is. I mean, again, this, like, yeah, they're hitting something. Maybe it blows out here. Maybe it's back that way. Maybe they, you know what I mean. It's like, this is the limits of what's been tested right now. And this is at Tarn Lake. So we have so many goddamn targets. There's so much left of this story. This is obviously one of those stories because you have, and we can see the Bleg samples right now, but there's tens of kilometers, multiple to tens of 10-kilometer trends here with anomalous Bleg samples. Even the TV Jeff trend here doesn't really show up that much on the Bleg sample. Still, we know what can be produced at TV, for example. And let's not forget, not all holes from Scarlet area, Tarn Lake and that, are out yet. And the majority of the massive sulfide hits from TV are left to be reported. So one would think, I mean, massive sulfides at TV, yeah, that's probably gonna run something. Will it be like bonanza widths and etc.? No, but I would expect they're gonna at least grow the TV deposit a bit. So it's like, if let's assume that Skina gets into production one day. I mean, any of these could be obviously satellite deposits down the road. So anybody who, let's say, buys Skina, I mean, if TV Jeff gets to, I don't know, 1 million ounces at least, good grades, that would probably not be a standalone deposit, but it's like, does it have value if you have a mine here? Yeah, I would think so, especially since they're putting in a road, a sea bridge, Eskay Mining, etc. But obviously the trick is here, in my opinion, as far as I can tell, we have so many targets. This is a district scale land play. We haven't even gotten to all targets yet. We haven't even gone back to Siblulu with the new geological interpretation at hand, because if you've seen the Decker videos, he talks about how this was misunderstood. They thought basically they had let's say a fault was going that way, but it was actually a thrust fault, so they kind of had the mirror image what was actually happening. So okay, yeah, I would like to drill this if their new interpretation, basically that the previous explorers kind of, was looking for the North Pole with the map upside down. Uh, and of course, here's like we see, there's plenty of where is it? There's plenty of stuff to drill or places to drill. Like here, 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 here. I mean, again, it's like this is pretty much one Eskay Creek mine, and they have a few holes in each target, and we don't even have all the assays. Obviously, this is a play that's like, and we know again, you only need, let's say, one good drill hit to. You need one drill hit, one discovery hole. That's what happened with Eskay Creek, pretty much. Let's say 139 misses, then they hit once, and then it was worth a few $billions or multiple billion. Well, today it would be worth multiple billions. That's really all you need, but you have to kind of carpet bomb and test and step out and figure out, etc. It really is one of a process, and obviously, I mean, when you think about it, it's like this is probably a play where it's like it would actually make sense to throw, let's say, $30 million at it each year, with multiple drill rigs, because again, given we know the value of Eskay Creek, it's like even if you burned 200 million just exploring, when you actually have that success, all of a sudden it's like, yeah, okay, cost us, I'm just throwing at numbers here, $200 million in exploration, and then you find something that's going to be worth 4 billion. I mean, that would actually make it worthwhile. The problem obviously is that, hey, this is pretty, I mean, the sector is, nobody wants to finance, or I mean, people are reluctant to buy anything that's cheap right now. And one would think that's like, yeah, if everything is cheap, boy, would I think people who are going to finance these companies because they get a cheap deal. That's not typically how it works in this space. Everybody wants to finance companies at the peak of a market, and now gold and silver aren't even low. I don't know what they're trading at now exactly, but it's like, yeah, $24 silver, that's not bad. Gold is, I mean, it's almost at $2,000, and still it's like nobody's buying these juniors. Anyway, to wrap this up, I would say it's like, in terms of pure potential, I would say there's an immense potential in Eskay Creek, Eskay Mining. We need one. I mean, okay, again, with Skina coming probably online one day, the critical threshold for success will obviously go lower, because in that case you would need less in order for it to still be suitable as a satellite deposit to whoever, let's say, is mining this. My hope, I would hope that, let's say, somebody who's thinking of acquiring Skina would come in and say, hey, here, take some money, Eskay Mining, and have another, or take a big swing again to see if, well, first of all, if what you already have or the known mineralization can grow, and just, try to see if you can find something. Because in that case, if you buy this, this is already, what is it, 5 million ounces? I mean, this is would basically be where most of the additional growth potential would be. So let's say this mine here is, I don't know what the mine life is, but like, let's say 15, 20 years. But depending on what is actually hidden at depth all over here and what they can find, who knows? Maybe there's going to be a major mining company that's going to be mining for 50 to 100 years just in this picture here. We don't know. So I mean, that's the exciting part. it is still a high risk, high reward play, because if we're thinking just long term potential and letting these guys drill, I would be shocked if they didn't end up finding a company maker deposit, or proving up a company making deposit. But that is not a certainty. That is the case. There is no, I mean, there's no big margin of safety in SK. It's a high octane, high risk, high exploration play. But again, just from balance of probabilities, one would think that it's more of a function of time and drill meters before something big is discovered here. That is my assumption, at least. But tangible margin of safety today, no, that we cannot say. So in other words, it's both, even if when it's gone down, it's both expensive based on what is confirmed, but I would say it's cheap based on all the potential. Because we have one example of what a VMS deposit here can be worth, and that was not even big. I mean, the remnants the Skeena is proving up is worth over $1 billion. That's excluding the actual original Eskay Creek mine. So the combined value might be, I don't know, $5 billion today. So it's like, yeah, $5 billion in a bit over 1 kilometer of VMS here. And we have VMS smoke for kilometers and kilometers. So yeah, I think there's something here. It's just a matter of time and money to find it. Those are my thoughts, at least. Consider me biased. I own shares of all companies mentioned here. I am sponsored by SK. I don't think I'm sponsored by FireFox right now. I don't think I'm sponsored by Nevada King right now either. But anyway, consider me biased, and do your own due diligence. This sector is about risk reward. There are no certainties. Don't invest money you cannot afford to lose. Did I forget something? No, and as always, like, know what the play is. I mean, know why you bought in. Most people buy in because they think something's going to go up tomorrow. Most people sell because they think something's going to go down tomorrow. Have always a longer time perspective than the market, and I would advise that like the more margin of safety a play has, that should correlate with your position size. Let's just put it like that. It's like, I mean, FireFox Gold, for example. Who knows? That might become a, I don't know, 10, 20 bagger. I literally have no idea. But it's like, how sure would you? I mean, the market isn't pricing in too big of a success of there being a big high grade mine. Obviously, it was like, yeah, we can't know that for sure. So those that's one of those stories, and I kind of same actually with SK. It's like either they're gonna work and maybe even work very well because they are actually found something or will prove something up over the next few years. And lo and behold, if you held it until, for the next 2 years, you're gonna have a multi-bagger on your hand, or they've gone south because they did not find anything or something else happened. So I mean, you don't need far from 100% hit rate. It's that the actual success stories need to get the time to be played out, because even if one of these stories became a 5-bagger from here, that's probably still gonna take at least, let's say, 2-3 years. So even if somebody said, "Hey, this is a 5-bagger," if somebody could guarantee that, you would still not get the 5-bagger and like, yeah, okay, I'll buy it today and tomorrow it's gonna be a 5-bagger. No, they're gonna go up like, I don't know, 50%, down 20%, up 50%, down 30%, up 60%, down, etc., etc. So there's no way that a success story can pay for a bunch of losers if you give it like, 2 months or whatever. inevitably some might actually go up and then fall back. It's like Eskay Mining was way higher earlier. I mean, a year from now, for example, or 6 months even. So in hindsight, it's like, oh, dumb. I should have sold. I mean, first of all, everything was more expensive back then. Problem with, like, for example, SK is that de-risked juniors have become very cheap. But again, if they would have absolutely nailed and connected TV all the way to Jeff North, nobody would be complaining because they would have like, okay, now we already know we have a multi-million ounce systems, like proven in, pretty much almost proven in one drill season. We only see what actually happened. So one can't just go back and look at the, let's say, results or the share price and say, oh, I should have sold or whatever. Yeah, everybody says that if the results are poor, but nobody says that if the results are good, obviously. We don't have all the facts. We don't know what's going to happen before it happens. That's the thing. That's the risk reward. You can't beat yourself up too much. It's like, if let's say after this coming season, let's say they hit a bullseye or whatever. Let's say they, wherever they drill, and it's like, oh man, okay, all of a sudden you actually have a SK Creek or half an SK Creek, or they step out somewhere and hit, again some, like, okay, now we have a discovery. That might happen, or they might drill and not find anything much, anything really exciting. Both of those realities exist, and a million other potential scenarios. We have no idea. So, but you can't be a hindsight investor either. So we have to do the best we can based on the probabilities and price we are offered by Mr. Market every day. So again, it's like, just because let's say you're down on a stock doesn't mean necessarily did a bad thing or a bad decision. If we're up on a stock doesn't mean we made a good decision by buying it, etc. We just see what happens. Nobody knows the true probabilities. And nobody knows, even if you're up, it might go down later on. If you're down, it might go up later on. It's a fluent situation, and nobody has all the nobody knows what's going to happen for sure. We just can't. The only thing we can do, the only thing we know is what price we pay, and then we can just try to make as informed decisions as we can, what the risk reward is on for the next 6 to 12 months or whatever. Yeah, thanks for listening. Have a great day. Bye.